to Ask the Expert, a web series designed to provide you with practical information on business and finance. I'm your host, Nicole Pride. So today we have with us LaTashia Satterfield Ogunlana. She is an entrepreneur with international experience. Her background includes developing new strategies in the area of governance, human resources, financial management, and procedural upgrades, as well as significant experience in auditing and systems and compliance training. But under LaTashia's belt is her achievements in these particular roles that are pretty cool. She's been the CFO. She's been the interim director of finance, the interim deputy chief of party, and she's managed, get this, more than $600 million in U.S. aid funding, and U.S. aid is the U.S. Agency for International Development, more than $10 million in the World Bank Global Funds, and more than $35 million funded by the Bill and Melinda Gates Foundation. But that's not all. She's managed millions in grants from the U.S. Department of Education and the U.S. Department of Labor. So we're so excited to have her here, share her expertise to help you small businesses, medium-sized businesses, and maybe even larger, help you with your taxes and filings. But you should also know that LaTashia is an ordained itinerant elder in the African Methodist Episcopal Church, and she preaches and presents workshops in the areas of self-esteem, female issues, womanism, relationships, sex education, finances, and African culture and religion. So we have someone who is well-rounded, informed to help us today, and we're so excited to have her here as our guest expert. Welcome.
Thank you, Nicole. It is so great to be here. I always say, don't let the background fool you. I am still able to receive questions about what the small businesses are doing, what the individuals are doing. I think it's helpful for us all the way around. My background just helps you to understand that I know exactly what I'm talking about.
Right. And I think, as we aspire to grow our businesses, you have that information that can help us build the foundation to build bigger and better, right? So that's great to have you here. So let's get to it. Let's just talk about, okay, it's time for us to file our taxes. Let's just start at the beginning. So some of us have different business structures, and that has different tax implications. Can we talk about a few of the traditional business structures?
Okay, so traditionally, we have businesses, and I am finding more and more that persons don't understand what those structures are. Individual, that's easy. Head of household, those pieces to the individual are easily done for most persons. The challenge is when you have a small proprietorship business, which can be put on your taxes as a Schedule C. Then there are persons who have LLCs, limited liability corporations, which the implications for those, as well as corporations and S-corps, helps you either within your tax structure that you're able to have taxes completed as a business, an S-corp, and part of that income can also be yours and put on a Schedule C. So in determining what type of business structure you're planning to set up determines how it will affect your current income. Most of us are working a job and we have that side business for that passive income. And there's always this rush to incorporate. And we don't have to rush to incorporate. There are tax benefits. Oh my God. There are tax benefits to being a sole proprietorship. Excuse me. I thought I had turned my phone off. And so being a sole proprietorship allows one to offset their income from the W-2 form because they normally run into losses in their normal business structure. So what we need to learn to do is not just see a lawyer when we start our businesses, but we also need to see a tax professional, a CPA, a CMA, a certified tax professional, a CTP, or an accountant who understands what it means to start a business and to be able to utilize tax benefits. I've learned in my career that all of the individuals who had more money than I always told me, what is your tax basis? Anything that you are thinking of doing, what is the tax implications? How will it affect your income? Does it reduce your taxable income or does it increase your taxable income? We are learning that most individuals don't understand these basic tax rules. They're not reading when the pieces come up on the internet and you're going through the scroll, as we all are on social media, and there's a new tax law, or there's a notification to say you aren't using these 7 tax benefits. Read them. Basically, they all say the same benefits, but it's just because there are so many of us from day to day who are trying to do our own businesses and who are trying to just live our lives that we're not thinking, what is my tax basis? What are my tax implications?
Okay, and so for those who may be aspiring to start their own businesses and they're listening to you, and right now, they're saying, okay, don't rush into it. Certainly, they should get the legal shelter of starting a business formally. Would you agree with that?
Definitely.
Yes.
I think that comes from as well working with a qualified professional who, again, there are many tax professionals who only know taxes. That's all they know. They can't help you with the bookkeeping. They can't help you with the business structure. There are lawyers who know how to help you set up a business, but they don't understand the tax implications. So what we're finding out, and what I've noticed in my experience, most persons go to one or the other, and they don't end up with someone like myself who is unique in that I understand all of the pieces of the puzzle and I can guide you through this process. You want to be able to take advantage of tax benefits. And we're losing out on that, particularly those smaller businesses who are making less than $1,250,000 because we're just starting out. And that is when you can take the most tax benefits. And then you're able to take even larger benefits on your business losses. Like everyone was upset when Trump did not pay taxes. But when you're at a larger tax bracket and you understand how to write off your losses in your businesses, then you're able to manage how much taxes you pay.
Okay, I don't want us to get sidetracked by the Trump discussion because we can go down a hole.
Right, but that is key. And most people understand that.
Yes. And so, yes, a lot of people do understand it. And it wasn't a big surprise to a lot of folks who know that how you can work the system, right? Yeah. Basically. So, okay. So for those who started their businesses, whether it's an LLC, S Corp, where should they begin? So now we know, taxes are due for some. It depends, right? Some people can create their own calendar year for their taxes. So it's not April for everyone, right? Correct. So it depends on your fiscal calendar. Correct. So are there tax implications with that alone?
So yes, there are. Because there are some, just as any individual taxes, there are some tax credits, tax benefits that you are not eligible for because of the amount of income your business has made. We don't always want to be at a loss because the whole point is to eventually make money and be able to move a passive income to your full-time income. So what we have to learn is that when we're thinking about moving forward past the introductory phase of a business, again, that first question is, what's my tax implication? Is this affecting my total income and how that income is taxed? And what are the types of transactions that will allow me a tax credit? And that's really where the bulk of the tax code changes come from. Tax code changes come from the fact that laws are passed to allow larger business credits, to open up the minimum balance or the minimum income that you have to utilize those business credits. We have the whole idea of, even this year, and I'm starting to research it myself, the trusts are being changed. Many people have been, when you go online, they tell you set everything up in the trust and nothing is in your name and it's in the business name. But there are new laws coming out regarding the tax code for 2024. So not for the taxes we're doing in 2024, but for the coming year's taxes of 2024. And so it's knowing how to look that information up. It's knowing how to have the right questions to ask your tax preparer based off of statements and articles like that. You don't have to know the full detail, but the tax preparer will be able to tell you how it's going to benefit your company and your current structure. And so you want someone who is up on the latest regulations and rules. And you yourself need to know just enough to be dangerous. We don't read those areas because we're so stuck in being creative or running the business. And we forget we still need to manage a bit of our income. Oprah Winfrey still signs all her checks. So you cannot get over on her and have written a check for yourself that wasn't supposed to be written.
And what resources do you recommend for people to stay up to date on those tax changes?
I think the best place is irs.gov. Mm-hmm. A lot of times when you scroll online, because we're in this social media age, you'll pick the first piece that comes up. But if you look at it, it's not normally the IRS. It's someone else who's telling you, I've read the IRS, pay me this, I'll do that. The IRS is free. If you go to irs.gov, they even tell you at a certain minimum, we'll prepare your taxes. Not only that, they answer questions so that you can prepare your own taxes. Now, it may take a while to get in. You may sit for a little while, so be prepared with your time. But the irs.gov has to post any changes to the tax code. Outside of, we always forget, we can always go to the congressional pages and find out what laws have been passed in Congress that day. Mm-hmm. And there are some tax code changes coming. I noticed the other day an article popped up. The National Council of Churches, thank God, they are actually working towards getting names and numbers. So go there and help them out to adjust the child credit tax. They're trying to get that increased so that we can actually have a benefit from it and continue it for some years. And I was so excited to read that because we need that since we're no longer having that additional income in our checks so that we can write it off on our taxes. I think individuals also, as they're starting businesses and you're running your own businesses, you need to manage your W-4, which is your actual tax withholdings from your main income. And we've got a new form to do that, which is making it more stringent, whereas a lot of persons were actually raising their dependent numbers so then they could claim more on their taxes. Mm-hmm. But if you look into what you are claiming, if you say have a home that you're still paying a mortgage on, if you have 2 businesses and you're doing Schedule Cs, that's at least 3 credits. So therefore, you could at least claim 3 to 4. Now, I would claim 3 to 4 just to be conservative, to allow yourself to have more money in your check. Mm-hmm. So then you're able to actually bring home more money and invest it to make money so that you can pay Uncle Sam. No one wants to pay Uncle Sam, but in not paying Uncle Sam, you've given him free money to make interest off of, your money that you worked hard for. I'd rather make my own interest. So I'm going to take what's extra in my check and put it somewhere to help me.
So as we prepare, what type of record keeping should we have?
Oh my, that's
and here's the question. There's always a debate I hear, if you still need to keep paper receipts, or not.
So I would say I'm more conservative and old school. I love to touch paper. Keep paper receipts. Hold them for that 7-year period that the government calls for in filing, that you're supposed to hold for 7 years, because after 7 years, it is reasonable and estimatable that you will have, if you haven't scanned them and moved to another system or archived, you don't actually need the hard receipts. I've already sent those documents to you. You should have come to me 3 years, 4 years in to ask for an audit and look at my documents. But when you look at receipts and record keeping, when having done nonprofit accounting, which is fund accounting, You can have money in the same bank account. The challenge is you must be accounting, managing, record keeping for that money that is going into that one bank account, particularly as a sole proprietorship. That means I don't have any kind of corporation. I am a individual with my own personal business. What you want to do is have a good quality accounting system. QuickBooks is good because it works for that person who's not an accountant, who just need to track money. That's perfectly fine. But then at the end of the year or every 6 months, you want someone who can do financial statements. You want them to look over and kind of, in essence, give you a review, not a full audit, but a review, so that you're making sure that you are accounting for all of your transactions. But it's recognizing that there are many softwares that will help you who are not big corporations, and you will be able to track every receipt that's personal. And then the other fund is the actual business receipts. The key is to be able to know that out of the $5,000 in your bank account, 3,000 actually belong to your business and you spent it on business items. And that other 2,000 was your personal expenses. And how you manage that is a good accounting system. There are a lot of systems that are coming out. There are a lot of audit firms who are starting to do services. One of them is bookkeeping. It's a wonderful way to pay less money than having to pay a full-time employee, and you pay that monthly service fee. But you have to be able, again, to read whatever statements are coming from them. You know, the average person, we don't even keep our checkbooks the way we should. So we need to learn to really be diligent about knowing how much money is coming in, how much money am I spending? Am I spending $200 at Starbucks a week? That makes no sense when I can buy a bag of Starbucks for $20 and make it at home.
So for the businesses that are a little larger and they already have a separate account that's just solely for their enterprise, and at that point, it's not about separating personal versus business, you would think, you know. But you used a phrase that I think is worth delving into a little bit more: reasonable and estimatable.
Yes.
And so looking at those receipts, and, you know, you can say that this is due to a business luncheon, or this conference was business related. Can you talk a little bit more about the credibility of your receipts and your bookkeeping, and what we should think about when we're claiming different expenses?
So the biggest expense that most persons don't recognize until it's tax time, particularly new businesses, and even sometimes medium businesses, if they haven't had a lot of food expenditures or luncheons or dinners. When it comes to food and meals, you can only take 50% of any receipt and calculate that towards meals and food. So unless you're having a very large luncheon, it may not be to your advantage as an expense to cover the entire bill, because you're only going to get 50%. Even if you're a truck driver and you're claiming your food because you're out of state more than 50 miles from your home, where you sleep is your home. And so therefore you are claiming your food and you only spending $20, you can only account for 10. So you have to learn to say, is food really a place I want to really spend an expense? And is it reasonable and estimatable that I'm spending this much in meals? That's the other piece. People don't think. If you are a non-traveling nurse and you've been doing this business for years and you're making your full-time income from being a consultant, a 1099 employee, but it's not reasonable and estimatable for you to use your lunches. It's about your clothes. It's about your uniform. It's about cleaning your uniforms. I think that in businesses, when we're in larger businesses, we've been in it so long, we're able to manage what amount of money we should be spending and is reasonable and estimatable. That is very key. If you are not a truck driver and you own your own truck, it's not reasonable and estimatable that you will always have vehicle expenses. If you're sitting at home as an IT professional and you've been working on your computers and they're in this shop that's next door to your home. You don't have enough travel expenses to really reasonable and estimatably claim them on your taxes. You could claim going to a conference here or there, but you do not want to claim something that doesn't make sense to the actual business you're in.
So how do you deal with that when you're working at home and you may be using equipment that's shared personally, but then also for your business? How do you handle that gray area?
So there is a place where you can write off the use of your home. And there are various ways to do that. Sometimes it does become affected by the new rules in the tax code. To my knowledge, there haven't been any as of late in that area. But because companies are reimbursing persons for their cell phones or their IT. So if you're getting some funds to cover those costs, you have to adjust how you are recording expenses of your home. My first calculation for me is that when you record expenses for your home, it's just like any business. You have to have a proper basis for recording your home's value for that space. And that's what people don't understand. But you have to be able to explain it in a manner that it makes sense. It's reasonable. If I'm working out of my home and I have 10 rooms, including all dining room, living room, kitchen, bathrooms, there are 10 rooms in my home. I'm using one room. That becomes the 1/10. The 1/10 of every bill in my home is what I'm using as expenses for my business, which then gets offset if you're receiving any kind of reimbursement from your job. The other piece to that is you could choose to calculate it using actual square footage. If your home is 1,000 square feet and your office is 50 square feet, then you come up with the fraction over the 1,000 to calculate this is the percentage that I'm using as my home use for your electricity, your utilities, your internet, your cell phones, any of those types of expenses.
That's helpful. Thank you. So what do you find are the biggest, like the top 5 mistakes that people make when they're filing their taxes?
What I've heard before,
Yeah.
and actually I've done it myself. People forget to sign. That is the easiest one. First, you forget to sign your name. And then the other piece is you may or may not actually claim dependents or give yourself the right category for your taxes. And that's even doing business taxes. There are forms we need to verify. We need to check. The government gives you a checklist to make sure that you filled out all the pieces of your taxes, as well as just take your time, complete them, leave it. If someone else has done it for you, leave it. Don't send it in right away. Look at it. Make sure that everything is completed that applies to you. And that's just a simple review. Shouldn't take more than 30 minutes, depending on how many pages you have and what you're claiming. But this is not, it is the simplest thing is signing the taxes.
Okay.
And then people are missing out on some of these tax credits. They still give you a tax credit for paying on your school loans, for paying into a qualified retirement plan. Depending on your income, you'll have a certain limit of how much you can claim, but you can still claim that as a tax credit. We also have that persons are not taking credits that are afforded to them. People are just doing taxes and taking whatever that preparer says and not asking questions. This is your information. Please ask questions of the professional because you need to understand the bare minimum. If they don't ask you certain things, but you know it's affecting your income, then tell them. Sometimes we want to not tell everything because we think it's going to raise our taxes, but we want to pay Uncle Sam. That's why we can have budgets to fix our roads, to fix the hospitals, to do the libraries. So what we want to learn to do, though, is manage our money and know where your money's going and how you're spending your money. Then that's going to help you understand how to record on your taxes.
I'm just wondering, in your experience, were there certain situations from a business perspective that have led to a tax audit? What are some things that, we should be aware of that would attract an audit from the IRS?
I think one of the challenges is, and I'm really bad with this at times in my lifetime, I've been like 3 years behind. And so I've had to go back and do taxes for 3 years. That'll, if you do it too much and they know you may not know what you're doing, they probably would audit you. I've heard it said that when people put round numbers on their taxes, when they're always round numbers, not just rounding up, but when you're always using zeros or fives, that's something that could cause them to look at an audit. The other challenge is right now, people are being audited, and really more so in the past 5 years, because a lot of tax professionals were your next door neighbor who learned how to do taxes, and they've been doing it for some years, but they didn't recognize that things had changed in the code. They weren't keeping up on the rules and regulations and going to the IRS classes. So at that point, about maybe 15 years ago, the IRS instituted where in order to be an actual tax preparer, you had to take a course and get a number. And then there's the tax preparer who can prepare your taxes and represent you if you get an audit. Well, now they've changed to where they are no longer allowing people to just have tax preparer pins and come in and do your taxes. You have to be a full-on certified IRS tax professional. And that's because a lot of these non-business affiliated tax preparers were not filing taxes in a manner that reasonable and estimatable, where they were accounting for the business transactions and then recognizing that there were tax implications, which meant those transactions may look differently on your taxes than they do on your books.
For the small businesses, though, that are doing the taxes themselves and they're using software and they're relying on the software for the latest, they're like, I'm covered because this software is touting that they have the latest and most current and up-to-date tax codes and policies. So what is your take on that?
I'm leery because reading is fundamental. Publication 17 is put out by the IRS every year for every tax year. Any changes to the tax code, any updates to the tax code, any directions on how to complete your taxes can be found in publication 17 for whatever year of tax information you're working with. Read it. It is so helpful. And it is not complicated. They show you the forms. They discuss each line item on the form. The book used to be about this thick when it's printed. It's online. You can go to irs.gov and look up past years publication 17s, the current publication 17. It is key to being able to know what can I do and can I not do on this.
Now, here's something that's not often talked about. For those who decide for whatever reason or another, they want to exit their business, but they still have to file taxes. Are there certain things that they should be aware of as they are exiting their business?
Not to forget to do proper financial statements. I think smaller businesses, particularly home-based businesses and personal businesses who even still rent out space, but they're still small because of the dollars that they're bringing in, they don't recognize that, oh my gosh, I'm ending the business. I should still have monthly financial statements, because that helps you understand, why am I ending the business? Where did these expenses become astronomical? How am I spending? What's happening to my money? As well as it helps you have that data in advance to determine, what do you need to do for tax bases? Do I need to curb spending? Do I need to go spend more? Do I need to invest more somewhere? I think that as businesses and sole proprietorships, when we start, we're not thinking of money as part of administration, and we're scared of it. And you can't be scared of it, because when you're closing the business, your assets need to all be liquidated, not just given away, not just kept, but you need to account for them in the closing of the business. Because now you've had this major loss. But you can't reap some of the tax credits on your loss because you didn't track that it was an actual expense in the beginning. You didn't account for that your equipment is still $5,000. And $5,000 still means that's a $5,000 loss because you're not using it anymore. You're not gaining any income. And you want to be able, when you close a business, to actually manage your losses so that you can then put them on the taxes. If you're selling items, yes, you're receiving income, but you're selling them at a loss because you're trying to close. And it really is, the fair market value is much higher than what you're selling it for, but you're trying to close that business. So you had a loss, which then can be written off.
That's helpful. And so, okay, so I just wanted to recap just to make sure we're catching all of the gems that you're throwing at us. The biggest thing that I hear you saying is go to irs.gov so we can know what's going on for ourselves, even if we're using a professional to prepare our taxes, just so that we are aware of what the requirements are, what are some of the tax incentives available to us that we can take advantage of. What I also heard you say is don't trust the software completely, and that's part of being educated, right? And then one of the biggest things I heard you say is let's not go overboard with our expenses and deductions that we have, right? So we have to be reasonable about what those things are that we're claiming. And so what I gathered, though, there's no hard set formula. It's basically common sense, right?
There you go. It is. I mean, let's be honest. As I've aged and experienced, we are taxed on so many things. The average person isn't even taking all of their taxes into account that they've paid already when they're filing their taxes.
Can you elaborate on that? What do you mean?
So there are state rules where certain things are accepted by the state, but not by the federal, and vice versa. So what most people haven't even looked at is the fact that you are paying vehicle taxes within your registration in most states. There's a tax. Some states, it's a full-on tax, and other states, a portion of what you pay for registration is really the tax. But that means you have to read the documents and the rules from that particular state's Department of Motor Vehicle. Well, on your tax form, you can still write that off because that is a property vehicle tax that you're paying. That's your property, and you're paying a tax on it. So you can put it on that schedule AB. It was combined at one point. You can put it on that schedule. And people don't realize they're paying stamps. Stamps is a stamp tax. It's a tax. We're paying gas taxes that we're not writing off. They've now allowed you to write. You can make a decision to take what the federal government gives you as your paid taxes on that Schedule B, right? But I'm sorry, Schedule A. They had combined and taken them apart, and then they've done new things again, the changes to the tax code. And so when you are able to look at all the taxes that you're actually paying outside of your check payment taxes or what you have to pay once you file your taxes, you will realize that things that we haven't been calling a tax, such as stamps, are actually a tax. I recall being a young girl in the 70s, and my mother would take out a shoebox at tax time, and she would literally take off from her taxes every tax that she paid. That came back about 3 to 5 years ago. And I think people aren't doing that anymore. They're actually just taking that standard amount for the total income that they have. But I guarantee you, if you go back and really calculate the tax, you will find that you are losing money. And
now, is that just for the sole proprietor that you're talking about? Or
that's actually for nonprofits. I've worked at nonprofits where I actually, in the very early part of my career,
I see.
We were reimbursing our employees to go and travel on their meals, whatever they spent. We were reimbursing them for whatever. And sometimes it was even supplies, but not all employees had the tax exempt documentation to show the vendor.
Mm-hmm.
So I had to go through all of the receipts from the
Yeah.
employees and add it up so
Right.
that we could put in a request to receive our taxes back because we were tax exempt. That was over $20,000 that I
Wow.
calculated.
Mm-hmm.
And
Yeah.
that just shows you in just day to day, people are not looking, they're not understanding what the tax code was set up for. It was set up so that those who made more money than the average employee could actually put money into the federal government and or the state government so that the state then had money to take care of roads, hospitals, volunteer fire departments, all those different necessities of living that we enjoy.
Mm-hmm.
But then, as always, someone's like, I'm tired of paying all this money because I have all this money. Let me find how I can pay taxes or not pay taxes in the long term of it. But where is the tax code telling me I have to pay something? And where is it giving me a space where I can show all of my transactions, which is I've lost money because the fair market value has actually gone down and I bought it at this rate. And so I should now be accommodated because I had to sell stock at the lower rate and now I've had a loss.
Mm-hmm.
And that's when you're really playing the stock game, but that's how you make money and or not have to pay taxes.
I hear you.
It's all in the transactions, but you don't know the transactions if you don't account for them.
Yes. Mm-hmm. And I think it's a good point too that you raised about for the nonprofits, because they're here too, and they have their businesses and accounting for all of those hidden taxes that they may have paid for, and deducting those. So that was really helpful. That was great. Okay, well, what is it that you want to leave people with today? If they hear nothing else, what is it that you want to drive in, drill down, knock them over the head with to make sure that they got it?
It's okay to pay Uncle Sam. You don't want to pay him $50,000, but it's okay to have to pay a couple of hundred, couple of thousand, depending on your tax bracket, because that means you made money off of your money. If you're letting Uncle Sam hold on to $5,000, $10,000, that was $10,000 you could have made additional money on throughout the year.
Right.
That's the biggest piece. And that means in order to do that, you need to have some education. So you need to do some reading, irs.gov. You need to ask some questions of persons who are knowledgeable, not just your friend who did it on their taxes, because a lot of people half listen. They are not in the mindset of, I want money, so let me understand money so that I can hold on to money and learn to invest money to make more money.
That part, that's so key, right? Yeah.
That's it. And that's really it. And if you do get a tax return and you receive money back, invest it. You didn't have it anyway.
Right.
Start investing. It's key. It's another way of having passive income. So what? The stock market just crashed. I had bought some Apple during the whole, the beginning when they dropped earlier in COVID. Don't be afraid when you make an investment and it's a bad day. What goes down must come up. And just realize that those investments aren't for your checkbook tomorrow. They're long term. Let it just ride. Leave it there. And investing does not have to be hundreds of thousands of dollars. Investing can be penny stocks. Think of the grandmother in Mississippi who saved all that money by just pennies and buying stock. Be wise about your spending all the way around. whether you invest or not, just be wise about it. And then you can have something in a bank account.
Well, thank you. So tell everyone how they can get more of your wisdom and work with you, particularly during this season.
Great, thank you. I have a business called Nyame Consulting. We do full financial consulting, business setup, from ideation of here's the idea, here's where I want to go with it, to I've had an idea, I need somebody to help me manage and account for this money so that I can do proper taxes. We also do just consultations to help guide you through those. Do I really need to start a business right now? Is it advantageous to me? You can meet me at gyenyameconsulting.net, GYENYAME consulting.net. Feel free to contact us. We will get back to you within 48 hours. We are here to help you. It is all about helping you. In my lifetime, through COVID even, many a small business was started with the PPP loans that were really meant for businesses that had already been around for a year or two, because you couldn't get the second half because you didn't have a year's worth of data prior to then when you received the first one. So we have to be mindful of what's out there. And if I don't know it, I'm sure I can connect you to my network, and there is someone who can help you with it. But definitely, thank you. Let us be wiser in how we manage our monies.
Excellent. So everyone will be able to go to your website, which is on the screen below. So we thank you so much. This was great. And this is good info. I'm sure people will be rewinding and listening again just to make sure they got all the nuggets and can apply everything as they do their taxes, prepare their taxes. So thank you for that. Appreciate it.
Thank you for having me.
Oh, yes, you are so welcome. So that is another edition of Ask the Expert, which is powered by Prudential, and you always have access to free financial education and counseling. You can see the link below where you can speak to a financial planner today. So we thank you for coming. See us next time, same place. Bye.